Application Project 3, Finance 311, Summer 2019. Hard to believe we're coming to the end of the session. What I'm going to do today is review what you need to do for Application Project number 3. There's also some lecture material embedded in here of things that we did not cover or cover just on a cursory basis. Okay, so the summary project, basically this is worth 20% of your grade. So it's a fair amount, so make sure you give that the attention that it would be worth. There's 4 distinct parts of the project, and the points for each one are identified in that section. It's due no later than 11:59. Just go all the way back up. Hello, welcome to Application Project 3, Finance 311, Summer 29. This is the final application project, and so it's going to try to tie everything together. The first thing is that it is worth 20 points, 20% of your grade. So when you're doing it, try to think about the time that you're going to spend on it, the quality, the depth you're going to go. There are 4 distinct parts, and each part is defined herein and has the number of parts. It's due no later than 11:59 on Monday, June 24th, 2019. This is extended. Originally it was going to be due on the 21st, and I've moved it 24th to give you a little more time to get it done. I'll be reviewing and grading them as submitted. Submission format is PowerPoint. Do your work in Excel and copy-paste into PowerPoint. Feel free to use audio or video comments to explain things. If you're not sure, please contact me and ask for help. I'd rather have you do it right than go down a path that isn't right. This project covers everything covered so far. The preceding items should be included in a thorough, integrated manner. Consider trends. Okay, always look at trends. It's both quantitative and qualitative. You collect data, organize data, and present community data, just like you have in the past. Then you analyze it and tie it all together. So this project is going to continue on based on the first one, the second one, so that you will really be able to get an in-depth look at the company that you're working on. We will grade this similarly to the prior two. Organization and presentation, accuracy, clarity and depth of response has become important. I really encourage you to read what you write and make sure that you just don't give me a definition, but you take a step and go further. Take a look again at liquidity, interpreting liquidity and leverage to give you some examples. And to see that everything is connected here. How can you how do you integrate them? Is there one comment that goes throughout everything and impacts everything? If so, try to help communicate that. Okay, part 1, strategy. Going forward, 7 points. This is a big one. Identify 3 strategies the company is planning on implementing to grow revenues. Not interested in those that are going to reduce costs, but we're just looking at those that they're going to grow revenues. You can find this in the investor presentation for your company. Use the investor presentation slides as appropriate. Bring them in. Then create another one that relates that investor presentation slide to the volume and rate drivers you identified. So here's the strategy. You want to use another slide that says, this is how I think that you think, in your opinion, how this will impact the volume and the rate, and therefore total sales. Thinking. Quantify if possible. Then, for each of the strategies, what are the risks to the implementation of the strategy? And they can be broader, but look at each one and say, what's the real risk of this? Part 2, risks, 3 points. Identify the 3 graded risks of the firm. Now, this can be found in the investor presentation. there is a risk section of the 10K. Now, there's a lot of risks the firm have, okay? Many of them are possible. What I'd like you to go through is identify those that are more probable than possible with the biggest dollar risk. Okay? So everything, let's assume all the risks are possible, but some are probable. Okay? So you want to focus in on them. And then once you identify what those risks are, indicate which category of the income statement would be impacted the most. Indicate what would be positive or negative. And that would be in sales and revenue, cost of goods sold, personnel expense, occupancy, other expenses, or taxes. That's part 2. Now, we're going to have to take a slight detour here right now and talk about analyst research. And in the financial world, we have sell-side research. And these analysts follow a list of companies. They build models to project results. They speak with customers, suppliers, competitors, etc. They have networks of people they talk to. They come up with financial estimates, price targets, and recommendation, buy, sell, hold. But what they're trying to do is drive business to their trading desk. Okay, so these are the big players. They're trying to get Vanguard, T. Rowe Price, pension plans to trade with them. And they try to differentiate themselves, and they were trying to create value. Now, these are the big investment banks that do this type of research, and Credit Suisse, Deutsche Bank, Merrill Lynch, Barclays, Citi, JP Morgan, Morgan Stanley, Societe Generale. We could probably come up with a lot more, big and small, but they're trying to drive business to the firm. On the other side, we have buy-side research, okay? And the same thing. They maintain a list of companies, they build models, they project, they have they do financial estimates and price target. It's about being right, not necessarily adding value. They can work for institutional investors. It's generally all paid. It's a fee-based service. So conceptually, you should be getting a more unbiased approach. Because if I'm trying to drive business to my trading desk as a sell side and generate new business with that firm, I may not be as critical. I don't know if that's true or not. I haven't seen any research to that. What are some of the buy-side analysts that we have? Cleveland Research, Thomson Reuters, Morningstar, Sabriant, CFRA, IHS Markit. And IHS Markit has not only specific companies, but they study industries and the like. So this is just some of the buy-side. The Wall Street Journal also gives us a lot of information. And so basically, it's free at this point for what you are needing to do. You click on search, and you put in the symbol, the 4-digit or 4-letter symbol. Mine is Steel Dynamics. And it comes up, and there's a lot on this front page. There's a lot there. One, it tells us what the closing price is. It tells us what the daily volume is, and we can see that today's volume and the average is pretty close. We can see what it traded at during the day, and then what the range is over the past year. It's gone up, down. Come back to this chart in a moment. But there's news about the company. It tells us who their competitors are. Key ratios. The PE ratio is here. Earnings per share, market cap, shares outstanding. How much is the dividend payment? 3.69%. And we come down, it tells you a little bit about the company, but what it does is it shows earnings and estimates. So here, if we're looking at earnings per share, what we can see is that this was fiscal year 2018. When we come here, we see it's 344, 324, 308. And we can see that over the past 3 months, the earnings per share estimate went from 417 to 344, 391 to 324. Now, we can actually go into it a little bit more, press more, and what comes up is it breaks it down by quarter, so we can see what's being projected. It has this stock price. So it's saying the analysts that we talked about that are watching Steel Dynamics, and there's 8, 9, 14 analysts, they are projecting a stock price that ranges from 27 to 47 with a median of 36. The average is 36. I always like to use the median. Now, that still gives us a pretty big increase, a potential 12% increase in our share price. And if we look at what the analysts are saying, 8 are saying buy, 1 is saying overweight, 5 are saying hold for an overall overweight. Now, as you can tell, there's one less person here, but that's how it changes over time. So you got the target price, you got the analyst, number of analysts, what the recommendations are. We get the range, and we can do this quarterly or we can switch to annual and get the same information. We can see what the historical prices were. And if we go back just one, we can see a trend. So if we look at annually, we can see the trend over 5 years, up 54, sales of revenue trend, sales of revenue growth at 23, EBITDA 2.01 billion. So we can also get more on the financials. But this is it, and it'll go through the income statement, sharing as growth, balance sheet, key things, ratios, margins, a lot of things. Now, as you have moved through the course, you know how to compute some of these. It's always your computations, but this is a good source to get information. I want to come back now to this chart that's at the top. I'm going to go over to the advanced chart setting, and when we look at this, this is technical analysis, and it's a mathematical equation, and it looks at the relationship of price and volume and tries to find trends. So if you look here, this is the daily price. So today it closed at 26.03. Back here on May of 18, it was at 49. It dropped back. I have it set at a 5-year, and over 5 years, what we can see is let's go right here so I can point out, is we use 2 averages. Simple moving average, which is 50 days, which is the black line, okay? And the blue line is the simple moving average for 200 days. So this is our actual, this is the 50-day moving average, and this is the 200-day moving average. So when you're looking at technicals over time, you're looking for trends that are positive, going up. Now, if this is at 5 years, let's bring up 2 years, and we see, wait a minute, it's trending down. If we go to 1 year, it's clearly, we're seeing the 50-day being on a downward, on the 200-day on a downward slope. When we start looking here, the 50-day moving average is going down, so it's below. So statistically, on a trend basis, what we're seeing is a decline. It's going downhill. It's not going up. And that, from a technical perspective, isn't good. If we look at it from the past 6 months, again, we can see that these data points, for the most part, have all been they're all under the 200-day moving average, but they're also under the 50-day moving average. So what we're seeing is a downward trend. That's another tool to use as you get ready for your final project. Analyst. The next piece is price to earnings ratio. And that's the price of the stock divided by the earnings per share, expressed as 2 decimals. The resulting quotient is saying for every $1 of EPS, how much is the market valuing the company. And there's a wide range of valuations because people have different views on what's going to happen in the future. We look at 2 PE ratios. One, trailing PE, trailing 12 months TTM, and is based on the 12 months trailing earnings, as then the stock price is the current price. Then there's the forward PE, and that's computed on estimated earnings. So there's two different ones we look at. Part 3, earnings per share today and in the future, is 5 points. What's the current PE and what's the forward PE of your company? What are the estimated earnings per share for the next 2 years? What's the estimate range price for the stock? What's the median estimated stock price? What is the consensus estimate for, Part 3, earnings per share, today and the future, 5 points. What's the current PE and what is the forward PE? Okay. What are the estimated earnings per share for the next 2 years? What's the estimated price range for the stock price for the next year? What's the median estimated stock price? What is the consensus estimate for the stock? Is it a buy, sell, hold, overweight, underweight? Based on your review of the company and the strategies, do you think this is reasonable? Explain why. Let me add that in here. Explain why. Last piece is pulling everything together, 5 points. What I'd like you to do is take everything you've done so far, put it into one document that tells a story. Integrate everything, lay it out so that when I'm listening to something, I know what's going on. Create an index and label the page numbers so that we can go through it easily. Based on what you learned, comment on what you think the future of the company will be like. Include comments that may refer back to trends and strategies that you think growth will happen in the next year or two. Explain your rationale. So that's the conclusion. If you have any questions, please let me know. Don't wait till the end to do this. We'll get this done. And then the last week, we have some easier lectures. And then we'll have our final exam on June 28th. Please let me know if you got any questions.